So, namaste and a very good evening to all esteemed members, fellow chartered accountants, joining us today for another enriching session of Golden Charcha. I'm CA Rashi Sonthalia and I have the privilege of coordinating today's session. Golden Charcha has truly emerged as the golden initiative of EIRC of ICAI, bringing cutting-edge knowledge directly to our screens. This initiative reflects our commitment to continuous professional development and ensuring that every member of our fraternity stays equipped with the latest tools and techniques. Before we proceed, I would like to express our heartfelt gratitude to CA Vishnu Kumar Tulsian, our chairman of EIRC, whose visionary leadership and commitment to professional excellence has made initiatives like Golden Chacha possible. Sir, your leadership inspires us to reach greater heights, and Golden Chacha stands as a testament of your commitment to our professional committee. I would like to hand over the mic to our chairman. Thank you, Vishnu sir, for joining us today.
Uh, Thank you, Ms. Sonthalia, and it is a matter of great pride for me that I am the person who is in a position to motivate the members of India for the is accessible to everyone. The topic today covered is very important, and we also have a good speaker who is the total command of the topic. Today, in the CNN, the channel, national channel, they covered our feedback at the morning 10 a.m. in the institute. We organized this program, although it was lately finalized. So, few people came, but it was fantastic. It was circulated. They were asking about the GST reforms and feedback of normal peoples, general people, for the reforms. So, this was the idea. Uh, is our speaker is already in this virtual presence. So I request Asi to please take it ahead. Before that, I speak that we have the Golden Jubilee Conference next month. This is in the month of October. So it is my heartfelt appeal to every to please come forward to contribute as much whatever way they can do. So this is your institute. This is your conference. So make it grand and make it tested at the national level. Thank you so much. Thanks, Tarun Gupta ji. Thank Chimpula Agarwal ji for joining hands with the EIRC activities. Over to Asi.
Thank you, sir. So, our topic for today is clarification on post-sale discount on GST. Today, we have with us a distinguished guest speaker, CA Chimpulal Agarwal. I would like to extend a warm welcome to you, sir, and respectfully request you to share a few words with us.
Thank you, Rashi. Thank you, Vishnu Tulsianji, for giving me opportunity. And Golden Charcha is a Charcha where the new speaker and newcomers are coming. They speaking, sharing, and they learn how to better, how to more improve. Or today's topic is on the GST treatment of the secondary post scale discussion discounts. Today is a special day on GST because Modi ji give our a gift on the occasion of Durga Puja Navratri session, and our daily life expense going to be saved more than 5 to 7% in a month. And also our rituals is there. Our Navratri started in all our family. We are doing Bharat to ऑफर ए गॉड दैट हमारे परिवार में, हमारे समाज में, हमारी जो व्यवस्था है उसमें सब में सुधार आए, तरक्की है. एंड ऑल्सो स्पेशल थिंग टू EIRC दैट कि ये एक अपॉर्चुनिटी आपने शेयर किया है कि नए नए कमर्स को बोलने का मौका मिलता है, उनको जानने का मौका मिलता है, एक्सप्रेस देयर व्यूज, टैलेंट, शो देयर टैलेंट एंड अदर थिंग. थैंक यू ऋषि, ओवर टू यू.
Thank you, sir. It's my privilege to introduce advocate and chartered accountant Tarun Gupta. He's a fellow chartered accountant, fellow company secretary, law graduate, and MBA with over 25 years of rich experience in finance, taxation, and financial management. He began his career with PwC and is now a practicing advocate specializing in indirect taxes and GST. Mr. Gupta is a master trainee on GST with ICAI, guest faculty on ICSI, NUJS Kolkata, and NACIL. and has advised several state governments, corporates, and global institutions like the World Bank and ADB. He has authored the book Practical Guide to Assessment and Audit under GST and is a regular speaker at leading forums and professional bodies. We are honored to have him with us today to share his valuable insights. Over to you, sir.
Thank you, Rashi. Am I audible?
Yes, sir, you're audible.
Okay, let me just share my presentation. Yeah, is it okay? Can you see the presentation?
Yes, sir.
Okay, okay. Thank you. Thank you so much. Thank you to the EIRC of ICAI, especially Chairman Sir, Mr. Tulsian, for giving me this opportunity to share my views on a very important topic. And thank you to Chimpu Agarwal and Rashi for the introduction to the session. So we'll straight go to the topic. Just a second. Yeah. So the topic for today's discussion is recent circular on related to treatment of secondary or post-sale discount under GST. Now, before I start and go deep into the topic, is the slide change? Is it okay?
Yes,
Can you?
sir. It's
Yeah. Okay. So before we go into the topic of post-sale discount, you see in GST, the issue of discount and the related issue of credit notes has been a matter of great litigation over the last since it started. Since 2017, 18, 18, 19, we have seen that when the department undertakes scrutiny of the assessees, so credit note is identified as a separate item in the entire scrutiny, and they want to ensure that if credit notes have been issued to any person, so whether ITC reversal has been done or not. And similarly, if there is any deduction in the liability of the seller by issue of credit notes, so whether the exact reversal of ITC by the purchaser has also been done or not. So this has been a quite contentious issue since beginning, and we have seen various litigations coming out on this aspect only. This issue also gets further accentuated with the issue of in many cases financial and commercial credit notes are issued. We also call it accounting credit note, financial credit note, commercial credit note, and different trade. There is a trade parlance which is used for such credit notes. These are basically non-GST credit notes which are issued in the various transactions. But the GST department has also different views on how to treat the GST portion on these such credit notes. So as a background to the circular, this circular is very much welcome, and it has been able to clarify some very important issues which were a point of litigation in the past. And hence, we will discuss some important aspects of this circular that has come up, and we will see how this circular touches those important aspects. Now, before we go into the discounts, we see that there are various types of discounts which are called by different names in the trade parlance. Sometimes it's called pre-sale discount or on invoice discount, post-sale discount, vouchers are there, trade discounts, etc. And so there are various names that are given to the discounts. But for the purpose of our discussion, let us understand that mainly there are two types of discounts which are given. So one is a discount which is given on the invoice. So say let us, for example, I buy something which is worth 100 rupees, and on the invoice itself, it will show the basic value as 100, discount say 10 rupees and 90, and GST will be charged on 90 rupees. So that is a plain vanilla case, not too much of a dispute on that. The department understands and they will accept the taxable value is 90 rupees on which GST has to be charged. But the complication starts when any post-sale discount is given. So say, for example, we have things like quantity discount or dealer discount, or you get some credit notes if you meet a certain target, and all these things. So these are some uh, aspects which have been clarified in this circular. So let us see the position which was prior to the circular. So there was a circular number 92, which was issued way back in 2019. And there some three aspects were very clearly identified and guidance was given on these three aspects. So the simple ones that were clarified was something which we know as free samples, which are not supplied. So, samples are given for free by some manufacturers when, say, new products are, released in the market. So it was clarified that no tax invoice is required for such free samples that are distributed, and ITC has to be reversed, which is the case as per section 17(5) also, that if free samples are given, then the ITC which is related to that has to be reversed. So this was the case that was clarified in this circular. Then we also have something, we know something called buy one get one free offers. So here also it was clarified that no additional tax has to be paid on the free supply, because it was uh, clarified that the additional product that is offered, the price of that is already included in the main product. Hence, there is no requirement for any additional tax that has to be paid on the free supply, and the ITC also is available in such cases. So this was also clarified in the circular number 92. Then we also have something known as volume discounts, which is a post-sale or a post-supply discount, which is a credit note issued by the supplier. And in that case, you see, in such volume discounts, it is generally not linked to a specific, say, one-to-one invoice. It is a discount that is given, across sales, across a certain time period. So if a dealer or a purchaser is a trader and he is buying from a manufacturer, so there is a scheme that if you, say, achieve this much of target in this month or within this month, then you will get a volume discount. And that is a single credit note that is issued to the dealer. So in such cases, it was clarified that on the one hand, the tax liability of the seller will get reduced, subject to the purchaser reversing his ITC. Now, this was a very tricky thing, that came up in assessments. Many of you would have seen that in scrutiny assessments, this was a very tricky thing that had always come up. Because on the one hand, the seller will reduce his liability because he will issue the credit note, but the department will not give him that benefit, because they will say that you have to prove that the purchaser has also reversed the corresponding ITC. Now, this was a difficult task for the manufacturer or the seller, because he generally doesn't get any confirmation as such from the purchaser that ITC has been reversed. We sometimes have the concept of debit note, and so if the seller is issuing a credit note, the purchaser will issue a debit note and a copy will be shared. But those things used to be happen in old case, in older times. But in of late, generally this trend of issuing credit note, having a corresponding debit note, confirmation statement of account doesn't happen. Hence, these sellers always had a challenge in getting benefit of the credit notes. Similarly, when we look at the buyer's perspective, if credit notes are shown in his GSTR 2A, then he is bound to do the reversal. Now, many a times when buyers have filed their 3B, they have either taken net ITC, which is they have not shown the reversal for the credit note separately, and hence they have taken net ITC, or if they have shown, then if the figures don't match with the credit notes that are auto-populated. And hence, the buyers are also facing an issue with respect to the reversal that is required. So both parties, the seller and the buyer, have been struggling on this issue of credit notes, which generally come out as a matter of fact based on discounts. So this was going on in the trade for the last so many, you can say, years, when assessments for 17, 18, 18, 19, 19, 20, 20, 21, all these are going on, and this is creating an unnecessary liability for both the sides. In the meantime, the government had issued a circular number 105 sometime in June 2019 also. You can see that this was almost like 3 months after the circular number 92 was issued. But this circular, after it was issued, it created more confusion than actually, it wanted to clarify. Hence, the government, in their wisdom, they withdrew this circular through circular number 112. So 105 doesn't stay today as of now. And this was going on. So we were facing issues with respect to so many issues that I discussed. After this circular 105 was withdrawn, and then we had one circular number 212, which was issued very recently, 2 years back in June 2022. Here, some relief was given to the purchasers specifically, because what happened was, I'll tell you the background of the circular. So there was a matter of Tata Motors in Rajasthan High Court. So what happens is that Tata Motors is a manufacturer of vehicles, as we are all aware, and they have dealers all over the state and all over the country. Tata Motor is also registered in every state because they have their own sales offices, and many states have the manufacturing plants also. So in Rajasthan, what had happened was Tata Motor had maybe multiple dealers across the entire state, and Tata Motors has the concept of billing the vehicle on a principal to principal basis to the dealer. And once, so say, let us assume the cost of the vehicle is 10 lakh rupees. But first they will issue the invoice of 10 lakh rupees, and then on a vehicle to vehicle basis, they will issue credit notes. So if they have to push the sales of a certain model or something like that, so they will identify which dealers have those models, and they will give specific discounts to those dealers so that the sales can be pushed. And this was going on in the GST era also. Now, during the assessment of Tata Motors, this question was asked to them, that you have reduced your output liability and you have passed on the credit note to your multiple dealers, but just confirm whether they have really reversed the ITC based on those credit notes. Now, this was something that obviously Tata Motor had never taken a confirmation from any of its dealers. And so this entire exercise started, wherein it started taking confirmation from each of these dealers, saying that you confirm to me that you have in your books reversed the ITC based on this credit note. And all this was collected and which was given during the course of, so this was rejected by the department, that no, we will not accept these certificates from the dealers. And hence, there was a high-pitched assessment that was done. The matter went to court, and the court also did not give much relief, but somehow, based on all this, and similar issues were also being faced by other companies all over the country, and hence, this circular came in 2022, in which it was basically said that if the purchaser can give a certificate, like in the case of Tata Motors, the dealers give a certificate. So the purchasers will give a certificate to the manufacturer or to the main supplier, whereby details of the credit notes, the details of the relevant invoice number against which the said credit note has been issued, and the reversal detail, whether in 3B or DRC 03 or whatever, has been done. And then if it is the value of ITC is more than 5 lakhs, it has to be certified by a CA or a CMA with UDIN. Or if the value is up to 5 lakhs, then it can be self-certified. So this situation, this and the department will accept the CA certificate as a matter of proof for reversal of the ITC, and hence the benefit of reduction in outward liability will be provided to the supplier. So this mechanism, as per the circular 212, will go on till the time we have a matching mechanism. Now we have some matching mechanism in the form of IMS. So if in the IMS credit notes, debit notes, and all tax invoices are matched, and so IMS is slowly taking over the entire process of matching. But till the time the entire process of matching is migrated to IMS, this circular is a beneficial circular that has been provided by the department, and it has been of great help, I would say, to many of these cases, because then these CA certificates or CMA certificates help in establishing that ITC has been reversed. So this was a scenario which was there in 2022, and now in the last 56th council meeting, where we had many path-breaking reforms that have come up. So some important aspects that have been covered in the council meeting with respect to discount also has been covered. So just let me inform the house that, yeah. So if one goes through section 15(3)(b) of the GST Act, so there are with respect to issue of credit notes under section 34 and the benefit of taking post-sale discount or discount per se. So there are three important aspects that have been identified. And one of the most important was that there should be a prior agreement. And if there was no agreement per se, then the department used to disallow the discount that has been given. So let me give you another example on this aspect. So again, let us come to this Tata Motor example. So Tata Motor, say for example, has 100 dealers, say in a particular state, and it will have a scheme, okay, that say during pujas, if you sell 100 vehicles, you will get an extra discount of say 10,000 rupees per vehicle and all. Now, this is just a scheme that is floated to all the dealers, but the department has raised questions on this aspect by saying that there is no agreement. There is no one-to-one agreement per se between Tata Motors or the manufacturer and the dealer. So, since there is no agreement, the conditions of 15(3)(b) are not getting fulfilled, and hence you will not get the benefit. So, high-pitched assessments were done on the manufacturer demanding GST on the credit notes, whereas the dealers were also asked that why they should not be charged with GST for wrong reversal of ITC. So both the parties were getting notices based on such things, but a very welcome thing has happened in this 56th council meeting, that the requirement of a prior agreement has now been deleted. So that is the recommendation of the council. It will have to be changed in the act per se. So we will have to wait for the amendments in the act, but this is going to come, that the requirement of prior agreement will be deleted, and the supplier will get reduction of value of supply if recipient reverses the ITC. So this will be deleted, and a consequent amendment to section 34 will also be made to align with the changes in 15(3)(b). And also any year-end discount without any agreement between supplier and recipient given through GST compliant credit note will become eligible for reduction in value of supply and tax by following only one condition, that is the recipient reverses the ITC. So now to comply with 15(3)(b), only one condition will be required. And what is that? The only condition is that the purchaser has to reverse the ITC, which is very logical also, because if I am the supplier and I reverse my outward tax liability, then obviously the purchaser has to reverse the input tax credit. And this mechanism is through the issue of credit notes under section 34. So once I am the supplier, I issue a credit note based on the post-sale discount, and it gets auto-populated in GST at 2A and 2B of the purchaser. So he will reduce his input tax credit, and hence both of us can enjoy the benefit of the credit note. So this is what is suggested as per the 56th council meeting. Now, let us come to the circular that has also been issued, which is the topic for today, circular number 251, which is on post-sale discount. So three main issues have been discussed in this circular. Now let us discuss these issues one by one. So the first issue is this, and this is very important. Please try to understand that credit notes are of two types, generally in trade and trade parlance. One is GST credit note, and the other is financial credit note or commercial credit note, which is without GST. So in many cases, GST credit note is not issued. In many cases, financial credit note is issued. So in many cases, we have seen that in the case of financial credit notes, although the government is a beneficiary in the case of the supplier, but in the case of the purchaser, they are telling the purchaser to reverse the ITC. Let me give you one example. So if I have done a supply of say 1 lakh rupees and the GST is say 18%, so I have paid 18,000 as GST. I am the supplier, there is a purchaser. Now, after some time, I issue a post-sale discount credit note, which is a financial credit note to the purchaser of say 10,000 rupees. Now that doesn't have any GST. Okay. So what has happened is now my value of supply is 1 lakh minus 10,000, 90,000 rupees. But the GST that I have paid is 18,000. The government is a beneficiary over here because the value of supply is 90,000, on which I should have paid 18%, but I have paid more. So government will not ask me anything. Okay. Now let us see from the scenario of the purchaser. Now the purchaser, he shows that his purchase in the books is 1 lakh minus 10,000, which is 90,000. But he shows that the ITC that he has availed is 18,000. Now here the problem is wherein the government or wherein the department emphasizes that the purchaser should also do a proportionate reversal based on the financial credit note. Now, when we submit on behalf of the purchaser that this is a financial credit note or a commercial credit note, and it is without any GST impact, and the seller has also not reduced the GST, so why should I as a purchaser reduce my ITC? But the department seldom hears what the assessee had to say in this aspect, and so demands were raised, asking the purchaser to do a reversal of the ITC. Now, this issue has now got clarified over here in this circular. And the issue is that is full ITC available to the purchaser when the supplier issues financial credit note? The answer is yes. Yes, full ITC is available to the purchaser, and ITC need not be reversed when financial or commercial credit notes are issued by the supplier. So this is a very important thing that has now got clarified, that in case of financial or commercial credit notes, full ITC is available. So here is an example of such a GST credit note, which I just said, that if A sells a product X to B for rupees 1 lakh and the GST is 18,000, A offers a post-sale discount of 10% to B. A issues a GST credit note to B for 10% discount. So A needs to reverse the outward tax liability by 1800 and B needs to reverse ITC of rupees 1800. This is a very normal GST credit note that we all know. Now, in case of a commercial credit note, so A sells the product X to B for rupees 1 lakh at 18,000 rupees, 1 lakh rupees and 18,000 GST. A offers a post-sale discount of 10% to B. A issues a financial credit note. See here, it's not a GST credit note, it's a financial or a commercial credit note to B for 10% discount. So here A need not reverse. A need not reverse outward tax liability of rupees 1800 and B need not reverse ITC of 1800. So this commercial credit note is a credit note which is only in the books. It has no impact on GST. It need not be uploaded on the GSTR1 and no e-invoice is also required for commercial credit notes or financial credit notes. Let me repeat this again. In case of accounting credit note, commercial credit note, financial credit note, by whatever name called, which does not have any impact of GST. So these are only book entries that are happening between two parties. It need not be uploaded on the GSTR1 and no e-invoice also needs to be issued in case of such credit notes. So this is a very good and important clarification that has come up from the government. Now let us go to the issue number 2, which is whether a post-sale discount offered by a manufacturer to the final customer but routed through its dealer distributor would be treated as a consideration. So there is a clarification. Now let us first understand the issue. The issue is that, let me come back to the Tata Motor example. Now, you see, the example that I gave you, the Tata Motor first bills the dealer for, say, the cost of the vehicle, which is, say, 10 lakh rupees. Okay. Now, once the 10 lakh rupees invoice has been issued, after that, Tata Motor will issue you can say, they will start issuing discounts, credit notes, or they will give post-sale discounts to the dealer based on vehicle to vehicle scenario. So let us assume that they are giving a 1 lakh rupees discount. Okay. Now here the question is that whether the sale value by the dealer to the final customer is 10 lakhs or 9 lakhs. Okay, let me just explain this again. The cost of vehicle is 10 lakhs. Tata Motor offers a discount of post-sale discount of 1 lakh rupees to the dealer. So whether the sale price between the dealer and the customer will be 9 lakhs or 10 lakhs. So here it has been clarified that these are two different transactions. The first transaction is between Tata Motors and the dealer, and the second transaction is between the dealer and the final customer. Okay. Now Tata Motors sells the vehicle at 10 lakh rupees to the dealer. Transaction number 1. Tata Motor intimates to the dealer that if you sell this vehicle, I will give you a further discount of 1 lakh rupees. Okay. Through the mechanism of credit note. So Tata Motor will issue a GST credit note. Now, the cost of the vehicle to the dealer is 9 lakh rupees. The dealer can now sell the vehicle to the final customer at whatever price he wants. It can be 10 lakhs, 9 lakhs, 8 lakh 50,000. He can pass on any more commission, margin, dealer, whatever, dealer margin, whatever. And so that's a separate transaction. So the circular clarifies that any post-sale discount that is given by Tata Motors to the dealer need not be added as a consideration value in the transaction value between the dealer and the end customer. But there is a carve out. And what is the carve out? You see, in some cases, what happens is that Tata Motors will have an agreement with the ultimate customer. Okay. Say there is a mining company which wants to buy, say, 20 vehicles, mining vehicles, directly from Tata Motors. So Tata Motor will get into a contract with the mining company and they will negotiate and come to a certain price. Now, what happens is then Tata Motor gets in touch with the dealer, because generally Tata Motors say these companies, manufacturers, they don't do direct customer billing. It has to be routed through a dealer, because there are post-sale warranties, there are post-sale servicing requirements, which Tata Motors obviously cannot complete. So this entire thing is routed through a dealer who has their, say, network of service stations, and they can be and the servicing and all these warranties can be taken care of. So Tata Motor will get in touch with a dealer and route the transaction, which it has finalized with the mining company through the dealer. So here, what does it say? It says that in such cases, so let us continue that example, that the cost of the vehicle is 10 lakh rupees. And Tata Motor gets into an agreement with the mining company by saying that I will offer you 1 lakh rupees discount. So the final cost to the customer is 9 lakhs. And Tata Motor informs the dealer that you bill the customer at 9 lakh rupees. But here what the circular says is that because this post-sale discount is being offered based on an agreement between Tata Motor and the final customer, this discount will get added to the consideration. This is the carve out that has been clarified in this circular. So let us come to the example. I'll show you through this example. So let us have these examples, two different transactions. So A sells a product X to B dealer for rupees 1 lakh, GST is 18,000. A offers a postal discount of 10% and issues GST credit note. A needs to reverse outward tax liability and B will reverse the input tax credit. A announces further discount of 10% on product X. A issues commercial credit note to B. B is the dealer and who sells the product X to C customer for rupees 80,000. No impact on transaction value with respect to further discount between A and B. I hope this point is clear. So here what we are seeing is the further discount. So these are being treated as two separate transactions. The first transaction is between A and B, and the second transaction is between B and C, and both of them are independent. Now let us see the example of Tata Motor which I gave, the agreement between A and C, which is Tata Motor and the mining company. So first example. So A sells the product X to B for rupees 1 lakh, GST is 18,000. A offers a postal discount of 10% to B and issues GST credit note. A needs to reverse the outward tax liability and B will reverse the input tax credit. A announces further discount of 10% on product X and gets into an agreement with C. The delivery is to be done by the dealer, which is B. A issues commercial credit note to B for the further discount. But here, because there is an agreement between A and C, so the dealer, which is B, he sells the product X to C customer for 80,000 plus GST, and he also has to raise the tax invoice on A for the further discount of rupees 10,000 plus GST. Now, so the discount which was passed on between by A to C, that gets added to the consideration. Now you see, I have written the last point in red. And the slide after that is also in red. Now here the why is it in red? The circular, so this is a confusion that remains in the circular. So what happens is that you see the price that has been agreed between A and C is 80,000. But the circular says that the further discount should be added to the consideration. Now, if B issues a tax invoice of, of 90,000 rupees to C, C will not accept it because C will say that the negotiated price between me and A is 80,000. So I want an invoice of 80,000 only. But B will say that no, as per the circular, I have to add the extra discount that A has given to you in the as a form of the as a part of the consideration. And hence I have to issue an invoice of 90,000. So it will be a problem for both B and C. So as a way out of this, what I suggest is that B will raise the invoice of 80,000 to the customer, which is the negotiated price between A and C. And for the discount portion, let B raise a tax invoice on A so that this also gets captured in the GST and it forms a part of the consideration. But here it is, there are two separate invoices, one to C and one to A. This is something that may come up as a confusion based on the circular. So we will have to see whether this gets any further clarification or what complication comes out of this interpretation. Now there's another example of the agreement between A and C. So here A sells the product X to B, which is the dealer, for rupees 1 lakh, which is 1 lakh plus GST at 18%, 18,000 rupees. A announces discount of 20% on product X and gets into an agreement with C. This delivery is to be done by the dealer. Okay. A issues commercial credit note to B for the discount. Okay. Now B sells the product X to the customer for 20,000 for 80,000 rupees. Now same problem here again. B has to raise the tax invoice of rupees 20,000 on A because the point that we discussed, their discount has to be added to the consideration. But giving a invoice of 1 lakh rupees to C, it will be a problem for C because he will not accept. Hence, the entire consideration has to be broken into two, 80,000 to C and 20,000 to A. This is a complication that we are seeing is coming out of the circular. So this is the second issue that has got clarified. And the third issue that has got clarified is whether a post-sale discount extended by the manufacturer to the dealer can be treated as a consideration in lieu of the activities performed to promote the sale of the goods. Okay, so now here let us understand what is the issue. The issue is that you would have seen that many a times dealers or the sale points that we see, shops and all, they do some advertising on behalf of the manufacturer. Many a times the store branding is done in a manner that it is looking same all across the country. Many a time some road shows are held, some contests are held. Now the issue is whether the cost of all these can be added as a consideration in the price which is being issued, taxable value which is being issued by the manufacturer or by the supplier to the purchaser. So here this has got clarified, and the first portion it says is that any activity which is carried on by the dealer on its own cannot be treated as a consideration. So let us assume that we have manufacturers of say mobile phones, Apple, Samsung and all, and we also have the dealers like Khosla Electronics and so many other Great Eastern and all. Now, any sales related activity which is done by them, by these dealers or by these shops, so that is an independent activity and it cannot be added as the cost of the say mobile phone. So let us assume the cost of the mobile phone is say 1 lakh rupees, and the per say, and there's a sales campaign that is undertaken, and the say cost per set is say maybe coming as say 2,000 rupees. Now the value of that 2,000 rupees cannot be added to the cost of the mobile phone. That is what the circular says, rightly so. So if it's an independent activity done by the dealer, it should not be added. But again, here there's a carve out. So what is the carve out? It says that in case of specific sale promotional activities, there are these are distinct services to the supplier, and GST is applicable. So what does this mean? So let us assume that Samsung itself tells all the distributors or all the shops to run a specific campaign, the amount of which will be reimbursed by Samsung to the shops. So some activity of say giving a prize or some contest is held at the shop, and whatever is the total cost incurred on that contest or on that activity, so Samsung will reimburse or they will give a lump sum to that shop. So that is something that the circular says is chargeable to tax, and on that GST is applicable. So let us see through this example. So A sells a product X to B for 1 lakh. A offers a postal discount of 10%. A issues a GST credit note. A reverses the outward tax liability and B reverses the input. B undertakes sales campaign. No invoice to be raised by B on A, as the activity is done by B on its own and cannot be treated as a consideration. This is the first portion that we discussed, that any activity that is done by the dealer on its own cannot be added to the consideration. But here, if we extend the example and we look at the carve out, so what does it say? That B undertakes sales campaign on instructions of A. So A, which is the manufacturer, in our example, it was Samsung, that the instructions are given by A, who promises consideration, either a reimbursement or a lump sum for the expenses incurred. So in that case, a tax invoice has to be raised by B on A, as the activity is done by B on behalf of A and has to be treated as an independent activity. So here GST will be applicable and B will have to raise a tax invoice on A. So these are the three important clarifications that have been given in the circular, which I am sure will be very helpful for the trade and industry, especially the first one, which is on the financial or the commercial credit note, because in many cases we have seen that demands have been raised for reversal of input tax credit, specifically, which I had said that in case of purchaser, based on the financial or the commercial credit note, demands for reversal of input tax credit have been raised, which was not sustainable as per law, and hence it has been rightly clarified that this is something that is should not be done. The second issue has been clarified, but as I had said that the consideration, the invoicing of the consideration may become little tricky on how it can be done. So we will have to see how it rolls out. And the third issue was very simple, not too much of an big problem, I would say, but it is good that it has got clarified. So the circular is expected to resolve several long-standing disputes, and it seems to be in conformity with the industry position that ITC reversal is not required when commercial or financial credit note is issued. So this is, out of the three, I would say this is the most important clarification that has come up in the circular. So with this, I was told to leave some time for question and answer. So I have finished within time. So thank you so much. And now we can ask any questions related to the topic. Thank you.
If anyone has any questions, they can just type it in the chat box.
I don't see any questions coming. Yeah, I think we can close because no questions are there.
Yes, sir. I don't think there are any questions. So I'll just, on behalf of everyone present, I would like to thank uh, you, sir, for this insightful session on clarifying on post-sale discount on GST. Your deep knowledge and practical perspective have helped us understand this complex subject with much more clarity. We truly appreciate the way you connected law and practice and real-world implications, making it highly relevant for us. Thank you, sir, for joining today's session and sharing your valuable time and expertise with us today.
Thank you. Thank you so much.
Thank you, sir.
Thank you, Rashi, and thank you to all the participants. And thank you to the chairman, sir, and EIRC of ICAI for this opportunity. Thank you so much.
Thank you, sir.
So can I exit now?
Yes, sir.
Yes, sir. Thank you so much.
Thank
Thank you.